Welcome back to the CryptoBot channel, everyone. My name is Josh, and right now there's a lot of uncertainty in the markets due to the fact that we have a Fed meeting coming up in less than 24 hours. So in just a moment, I'll be explaining exactly what this means for markets, and I'll also be covering, of course, Bitcoin and Ethereum later in this video. And towards the end of this video, I'll be giving you an update on the Celsius situation, which is very important for all crypto holders, so definitely stick around. Just starting off the video talking about the Fed meeting, which is due to happen in less than 24 hours. In fact, the exact time it's meant to happen is 6 p.m. GMT time. And in fact, at 6 p.m. on the 15th of June GMT time, which is tomorrow, we're not only getting the Fed's interest rate decision, we're also getting multiple projections. And at 6:30 p.m. GMT time tomorrow, we're getting the usual Fed press conference where we hear Jerome Powell, who is the chair of the Federal Reserve, speak. And sometimes there's some valuable things that Jerome Powell says in that press conference, which I'll be sure to cover on my Twitter in real time if there is anything valuable. But of course, the Fed's interest rate decision is really the most important thing out of this Fed meeting. And before last Friday, when inflation came in a lot hotter than expected and actually broke into new highs, the majority of market participants were expecting and planning for a 50 basis point hike, which is 0.5%. But with the CPI data for the month of May, that came in just on Friday. And because of the fact that we now know inflation definitely did not peak in March like Jerome Powell originally said, and instead it is only potentially getting worse, we might end up seeing a 75 basis point hike due to this bad outcome in inflation. And ever since we got this bad inflation figure last Friday, there's been a lot of investors starting to price in a potential 75 basis point hike, which is why between Friday and right now we've been seeing a lot of bearish price action in the stock market. This right here is the Nasdaq 100 index on the daily time frame, and once again you can clearly see that recently, especially since the end of last week, we've seen a lot more bearish price action, which, like I said, this could potentially be investors starting to price in a potential 75 basis point hike ever since we got that higher than expected inflation figure right around here. But with that being said, it's unlikely that every single investor has priced in a 75 basis point hike, which means if we do end up seeing a 75 basis point hike, we could see another short-term dump for the stock market, which could also transfer over to crypto. But on the flip side, if we somehow, and honestly I don't know how this would happen, but if we somehow see a 50 basis point hike, then that would actually be a bullish signal in the short term, and we could see a decent rally in the stock market and in crypto if we see a 50 basis point hike. But the only problem with that is inflation would likely get even worse if we only see a 50 basis point hike. So that's basically the situation at the moment, and of course we just need to wait and see what happens tomorrow with the Fed meeting. And of course I'll be sure to keep you updated in these videos and in real time over on my Twitter as soon as the numbers come out. So if you do not follow me over on my Twitter, make sure you're doing that, and the link to my Twitter is in the description down below and also in the pinned comment. And now getting into the Bitcoin part of this video, this right here is the Bitcoin to US dollar chart on the weekly time frame, and right now we're trading around that 200-week moving average, which is sitting in between 22k to 23k. And as the regular viewers here on the channel would already know by now, this 200-week moving average, the red line, usually is around the bottom for the Bitcoin price during major bear markets and crashes. But as I've also previously mentioned on this channel, from time to time, we do have the rare occasion where we might see a wick below the 200-week moving average, like what we saw in March 2020. At that stage, during that crash, the 200-week moving average was coming into play at around 5,500, but the Bitcoin price actually crashed down towards around 3.8k to 3.9k. But then we ended up closing that weekly candle much closer to the 200-week moving average. And in fact, even in that case, we saw the weekly candle close slightly below the 200-week moving average, because that weekly candle close was coming into play at around 5.3k, while the 200-week moving average was coming into play at around 5,500. So this March 2020 example shows us that it's not the end of the world if we do see a quick crash below the 200-week moving average, for as long as we see the weekly candle close up towards the 200-week moving average. But for the most part, according to Bitcoin's entire price history, if you've dollar cost average into Bitcoin around that 200-week moving average, you've done extremely well over the longer term. And another moving average we could pay attention to is the 300-week moving average, which is this blue line right here, because it was this 300-week moving average that marked the actual bottom for the March 2020 crash, even the bottom of the wick. And now I want to make it clear that I'm not saying Bitcoin's guaranteed to go down to that 300-week moving average. I'm just saying that is what happened during the March 2020 crash, which is why we should keep an eye on this moving average. And right now, this 300-week moving average is coming in at around $17,000 per Bitcoin. Bitcoin. But like I said, we've only seen just one extremely rare occurrence where we've seen the Bitcoin price hit that 300-week moving average. And something else that we also have to keep in mind is the fact that the weekly Bitcoin RSI is currently well and truly entering into oversold territories for the first time since the end of the 2018 bear market. And in fact, right now, we're actually more oversold according to the weekly Bitcoin RSI than what we saw at the end of the 2018 bear market, according to the RSI once again. And now giving you a quick update on the Bitcoin long positions over on the Bitfinex exchange, which are basically holding up at around the same sort of level as what they were sitting at yesterday. And as for everything else around Bitcoin, nothing much has happened since yesterday. So if you missed my last video on the channel, definitely check that one out. And now getting into the Ethereum part of this video, this right here is the Ethereum to US dollar chart on the weekly time frame. And right now, the weekly Ethereum RSI is extremely oversold. In fact, right now, the weekly Ethereum RSI is currently at its lowest level we've ever seen before. Seriously, right now, it's lower than what we saw at the end of the 2018 bear market. And that was the only other time where we've seen the weekly Ethereum RSI enter into oversold territories. And right now, we're even more oversold than what we saw at the end of the 2018 bear market. So this signal alone tells us that we should be due for some sort of relief rally at the very least within the next 1 month or so, likely this month. But once again, I want to make it clear that this is not a short-term signal for Ethereum. This is a much longer-term Ethereum signal, like what we saw at the end of the 2018 bear market. Because back then, the moment the weekly Ethereum RSI entered into oversold territories, we still had another 3 more weeks worth of bearish price action before then we had a decent relief rally for Ethereum. And now just checking our Fibonacci levels of support, and right now this 38.2% Fibonacci level, which is the second most important Fibonacci level, is providing perfect support for Ethereum. This right here is coming in between 1,000 and 1.1k. More specifically, it's coming into play at around 1,060 approximately. So as of right now, that is still the level of support that I am paying strong attention to. And something else that I'm paying strong attention to is the Ethereum short positions on the Bitfinex exchange, which are still dropping. And this right here, by the way, is on the daily time frame. And just today alone, we've seen another 7.1k Ethereum leave short positions on this particular exchange, which is equivalent to around $8 million US. And of course, that is on top of the hundreds of millions of dollars worth of Ethereum short positions that have closed already over the past few weeks. And once again, if you have no idea what this means, definitely watch my last video on the channel, because in that video, I went into much more detail about all of this and what it means for Ethereum. And now giving you an update for Ethereum versus Bitcoin here on the weekly time frame. And if you're looking at the weekly RSI for Ethereum versus Bitcoin, this is actually getting really close to oversold territories. And in fact, right now, it's basically scraping along oversold territories. But if you're looking back at the 2018 bear market, that is what we saw towards the end of the 2018 bear market, right around here. But Ethereum versus Bitcoin still had one more significant drop to the downside before then it bottomed out after we already saw a relief rally after the bear market. Because basically during this time period right here in early 2019, Bitcoin was outperforming Ethereum to the upside. And so based on the weekly Ethereum versus Bitcoin RSI getting very close to oversold territories, we could see limited downside price action for Ethereum versus Bitcoin in the somewhat shorter term, like what we saw during Q4 of 2018, but we could still end up having one more decent leg to the downside, especially considering the fact that we do have Wyckoff distribution playing out right now, which is of course a significant bearish pattern, and also we potentially have a massive bump and run reversal pattern forming right now. And this type of pattern is basically a 3-stage bearish pattern. First of all, we have the lead-in phase for the pattern, and then we have the bump phase, and then if the price simply breaks this upward trending line of support, which is coming into play at around 0.048 Bitcoin per Ethereum, then in that case, that is when we could see a further reversal for Ethereum versus Bitcoin. And technically speaking, the price target for a bump and run reversal pattern is towards the beginning of the lead-in phase, which in this case is basically the 2019 and 2020 bottom. But honestly, even though I am expecting more of a pullback for Ethereum versus Bitcoin, I wouldn't exactly be betting on seeing those lows again like what we saw in 2019 and 2020. Of course, anything is possible, but that would obviously be a massive move for Ethereum versus Bitcoin. And to see that play out, we probably need to see more confluence around those lower price targets on top of just this one single pattern. This one single pattern by itself is probably not enough confluence to be targeting prices that low, but of course, this is still something to keep in mind moving forward. And now giving you an important important update on the Celsius situation, because since my last video that I posted yesterday on the channel, Celsius has actually added another 2,000 Bitcoin, or technically wrapped Bitcoin, to their collateral for this loan. And the reason why they did that is to simply lower their liquidation price for this loan. But on top of adding an extra 2,000 Bitcoin as collateral, over the past one day, they've also paid down their loan by 47 million US dollars. And by doing that, they further lowered their liquidation price over the past 24 hours. And in fact, if you watched my video yesterday, their liquidation price just yesterday was at around 18,500 Bitcoin. And a day before that, just before they stopped withdrawals, it was at around $22,000 to $23,000 per Bitcoin, which means if they did not stop withdrawals, and if they just let this loan go astray, then by now the liquidation price would have already been triggered, because once again, just a couple days ago, this was at around $22,000 to $23,000 per Bitcoin, but right now it's sitting down towards $14,000 per Bitcoin, which is good to see. That is, of course, better than 22K. And in case you're wondering what all of this means, basically, Celsius has around $500 million worth of Bitcoin as collateral locked up in this loan. And basically, if the Bitcoin price goes below $14,000 at the moment is their liquidation price, basically, if the price of Bitcoin goes below their liquidation price, whatever it is at that time, then this collateral begins to get liquidated, which is around 24,000 Bitcoin that are potentially getting dumped onto the market if the Bitcoin price triggers that liquidation price. So with that in mind, the lower their liquidation price is, the better that is, because if their liquidation price is very low, then that will decrease their chances of getting liquidated. But ideally, it would obviously be great to see if Celsius can just pay down this loan as much as possible. So then there's less overall risk of Celsius potentially going under. And if you want more information about this entire situation, check out my last video on the channel once again. And also, if you want to stay up to date in the crypto markets at all times and stay up to date on this Celsius situation, make sure to follow me over on my Twitter, because I've been posting real-time updates over there, as you can see right here. And make sure to check out this video popping up right here on your screen if you want to know how to maximize your profits in crypto, even if prices are going down. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.